Welcome back. This is Open Exchange and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, a good time to get in some derivative strategies. We start a new series, remember, today. Manoj Muralidharan, the VP Derivatives at Religare, joins us on the show. Hi, Manoj. Good morning. What's the strategy you have, first of all, on the index? And fill us in with your picks as well.
Good morning, Nigel. Nigel, I guess there are a couple of indications more into the quantitative side that we need to understand every time a contract starts. So simply we'll go with the FI stats first. They are starting this month with a good 81% of short positions, which they did in Jan as well. And Feb being the event which we had, the union budget as well, they were a bit less cautious, I would say almost at 9.2%. So whenever the FI starts with such a 80 odd percent, anything above 75%, we generally see that the positional trend, when I mean by positional is which has a good 300, 350 points move on either side, would be at least a sell on rise. Now, we are starting with almost 1.05 crores in terms of positioning for the Nifty. What we did last time was almost 98.7. So a good 3 to 5 odd lakhs positioning in the Nifty has happened. Now, whenever you see during rollovers, the meat of the open interest is usually in the short rolls, and then intra-month you see an addition of, let's say, 10 to 15 odd lakh. That's how a month pans out. So we believe this entire average of short position that the index has or the Nifty has is somewhere close to a 17,850. So that gives us enough room for a bounce of almost 250 to 300 points. So at least for the short term view, we are not negative. We expect the Nifty to bounce to almost 17,750 to 17,800, 820 roughly on the futures. And that can be clubbed with the bank Nifty as well, because this weighted average price of short position that we have in the bank Nifty is almost at 40,372 precisely. And we believe IT as a sector, these three can club and give us a bounce. So the trade or the strategy for this weekly expiry would be to buy a 17,700 call option. You can buy it for 50. The target can be 102 as that. Or if you're going for a future, we can go long. As I said, the stop loss would be somewhere close to 17,500 to 520 with a target of almost 17,750 on the futures.
And individual stocks?
Stock specific, Sonia, I guess we believe IT and FMCG is almost at 92% in terms of roles, and there are a couple of good stocks with good base building. So Infosys at 1540 to 1548 becomes a good buy with the stop loss 1520. We expect a good move, almost 1572 to 75 on that. Tata Motors also at almost 420 to 428 becomes a buy, a stop loss of, let's say, 415, and we are expecting this entire month of March to be somewhere close to a 450 as a target for the stock as well.
Okay, thanks a lot for that, and have a great day, Manoj. That's Religare Broking with their views on the F&O space. How